After a rather shaky week before we enter the month of April, the S&P and the market as a whole has certainly been in the red. But don't let that distract you from our reality. We are only continuing to climb on the year, up at this point in time by almost 11% year to date, which all begs the questions. Should we be expecting some market gyrations and soon? And if so, well, where exactly do we all invest? So today, I have some macro news bites for you, followed by 6 dividend stocks that you should certainly have your eyes on throughout the month of April. With that, are you ready? So macro-wise, we can actually keep it relatively simple. Our eyes should remain on inflationary data and Fed speak when it comes to interest rates. Nothing too new there, but it's important for all of us to note that inflation just crept up to 3.9% as of our latest inflationary reading, which triggered the Federal Reserve's hawkish response to hold rates exactly where they were. Now, most importantly is just trying to understand when rates will likely begin to come back down, because that will certainly spark a bullish run.
Inflation has been falling steadily for 11 months.
Right.
You've avoided a recession. Why not cut the rates now?
Well, we have a strong economy. Growth is going on at a solid pace. The labor market is strong, 3.7% unemployment, and inflation is coming down. With the economy strong like that, we feel like we can approach the question of when to begin to reduce interest rates carefully. And, we want to see more evidence that inflation is moving sustainably down to 2%. We have some confidence in that. Our confidence is rising. We just want some more confidence before we take that very important step of beginning to cut interest rates.
However, here's the insanity. Despite all of these macros, the good, the bad, and everything in between, we're at least up on the quarter by over 10% when it comes to the S&P 500, which is also quite alarming because if the numbers don't make much sense, which believe me, they don't, I'm sitting here asking myself whether a major market correction could be on the way.
While we have seen tremendous economic growth that we weren't expecting, we've seen inflation come down, we've seen a very strong labor market, the things that we're concerned about continue to be things that we're concerned about. And I think why we're particularly concerned right now and why we think this rally is so remarkable is I think if you look at the pace over this period from October to now, we actually have not even seen a 2% correction. And over that time period, we haven't seen something like that in over 6 years. If you look at all of these sectors that are doing well, on a technical basis, they're all either overbought or extremely overbought. So in our mind, I think even on the short term, we would all agree that the market could probably take a breather.
I mean, for the most part, we are just completely overvalued. However, timing the market is, of course, a loser's game. So while these macros are interesting, I suggest that we all either just put our heads down and work harder to dollar cost average into an S&P fund, or just look into high quality companies. And that all leads me to our dividend stocks for the day. The first mention being Medtronic, ticker symbol MDT, a stock that I've recently mentioned, but I couldn't help but mention it again after it just popped up by almost 5% this past week following the news of the FDA approving their latest generation aortic heart valve replacement implant. And perhaps now is the perfect time to share with you that Medtronic is a medtech leader. I mean, a medical technology company that's been developing and manufacturing all sorts of healthcare instruments and gadgets. Though during the tougher economic times, I'm going to be honest with you, a company like Medtronic will falter, given their sales fall as hospitals and the alike cut costs and hold off on new purchases. So we see Medtronic still on the way down by more than 20% over the past 3 years. But on the flip side here, it's almost up by 80% in the last decade. And regardless, we have plenty of analyst optimism here with over 8% worth of upside expected, coming up to a share price of $94.46 per share. And get this, over 7 million shares purchased by smart money last quarter. Now, Medtronic is a great buy and hold in my opinion, especially with the dividend yield coming in at 3.18% while maintaining a 13% average growth rate over the last 20 years and a very strong 45-year dividend streak. Next up, let this one be your reminder that as we enter April, tax day is right around the corner. And therefore, there to help you file is H&R Block, ticker symbol HRB, which is a tax prep company and I think often flies under the radar for a lot of us dividend investors. It's typically more in the spotlight right about now. As we can see, it's actually up on the year slightly, trading for $48 per share with a PE ratio at 13.4. But zoom out with me to see where the magic really happens for H&R Block over time. 129% worth of growth over the last decade, with analysts projecting a share price to hit $55 per share. That's about 13% worth of upside. But now personally, H&R Block stands out as a solid dividend investment with their 2.63% dividend yield that's been experiencing over 25 years worth of uninterrupted dividend payments while growing the dividend on an average of 6% year over year for the last 20 years. But now say that you've already filed your taxes or H&R Block just isn't your kind of investment. I want to go ahead and put TJX companies, ticker symbol TJX, on the radar for you, which has TJ Maxx, Marshalls, Home Goods, and HomeSense all under its operational belt. And it makes today's list based on the fact that I don't think inflation is actually going to be coming down anytime soon, leaving a lot of consumers like you and I more interested in coupons, discounts, and deals when we're actually shopping. TJX company then becomes the play. Now we can already see that the stock is up on the year by 8%, trading for $101 per share, but I don't really think it's going to be losing any of its steam just quite yet. And zooming out, we can actually note that even when we got bouts of good economic news, TJX companies stayed the course in the green, climbing to higher highs with over 279% worth of share price appreciation. As for analysts, they foresee over 10% worth of upside, popping up to $112 per share. And until then, a solid 1.48% dividend yield to collect on, which has been growing on average here by 20% year over year for the last 20 years. Now, investors, right there, you just got 3 out of the 6 dividend stocks. But before I proceed, there's a reality check for all of us, especially the 83% of you who haven't subscribed, because this journey is about leveling up and taking massive action, with the first order of business actually being subscribing to the channel to get the best dividend stock ideas and macro insights every single week once you're subscribed to the channel. And then most importantly here is actually tapping on the thumbs up button for me, because that lets me know that this is the content that you came here for and that you're getting value from. So if that's the case, give that a click as well. Let's get back to it here with Costco, ticker symbol COST, a retailer helping all of us get more bang for our buck, and most importantly, another player in the game for those who are out there shopping for great deals, which is why we also see Costco is up on the year by over 11%, but it recently faltered, as you can see, so it's now trading for $732 per share. But don't focus so much on the now. I want you to go ahead and focus on the future, given Costco has soared by over 711% over the last decade, with analysts still bullish and projecting more upside, 7% worth of it, climbing up to $782.59 per share, while hedge funds have certainly been loading up on Costco as well. Now, as for Costco, a lower dividend yield here with just a 0.56% yield, making this one a growth machine with an average of 13% worth of growth year over year for the last 10 years, while the company has been shelling out dividends without reduction for over 19 years. However, if you're looking for more of a comeback player, I hear you there, this one is an opportunity for you then right now. United Parcel Service, ticker symbol UPS, which is a logistics company and a logistics leader. Given the nature of our economic context right now with all the cost-cutting measures in place, well, year-to-date, UPS remains down 5.2%, trading for $147 per share and a PE ratio below 20 at 19.7. But when times turn around, the stock is likely to pick back up. After all, we see it so with over 106% worth of growth over the last decade, through the good times and the bad times. But check this out. I'm not the only one with confidence in UPS. Smart Money has been making more money moves on the company as well, buying more than 2.1 million shares last quarter, while analysts project over 12% worth of upside, climbing up to a share price of $165.44 per share. And until then, we can actually just enjoy the UPS dividend thanks to the yield coming in at 4.43%, which has been growing on average by 10% year over year without reduction. And then we're going to wrap up here with basically where we started, a healthcare pick, though not on the technology side, a industry leader in its own right, Amgen, ticker symbol AMGN, which is a world-leading biopharmaceutical company that, just like all the rest of them out there right now, has a pipeline of medicines on the ready. So after seeing Amgen slide rather recently from $324 per share to $286 per share, and it's come down in that PE ratio as well to around 22, the buy alarm went off for me, especially as Amgen's history speaks for itself, with nearly 200% worth of growth over the last decade, and analysts as of right now remaining bullish on Amgen with over 10% worth of upside expected. Share price will climb here to about $316 per share. But until then, a solid dividend coming in at 3.14%, and it's maintained a dividend streak for 12 years, while most importantly here, experiencing plenty of growth for us dividend growth investors, on average 16% worth of growth year over year for the last decade. Now, there you have them, all 6 of them. I want you to go ahead and drop your thoughts on which dividend stocks you have, what you think about them, or if you have your eyes on better dividend stock opportunities for the month of April. Of course, join me on the journey, or just go ahead and catch more insights right here in this video.